Hi, this is Zak Mir with the Share Talk Bulletin Board Heroes on Wednesday, the 20th of June. Starting off with a blast from the past in the form of CapEx, where there's been an intriguing bear trap reversal, bear trap gap reversal with a gap higher today, also pushing through the 50-day moving average, which is a plus around the 9.55 level. So a double buy signal in terms of the rocket launcher towards the 50-day line and the bear trap. The implication is that we should retest April resistance towards 12.5, 13 pence, which is also the top of a rising February trend channel. The time frame, the next 1 to 2 months. Only an end of day close well below 9 pence now, delaying or questioning the recovery scenario. On to a stock which is also a bit of a blast from the past, Goldstone Resources. Here we had a bit of a flurry initially, but the main point here is actually that we're in the run up to a golden cross buy signal between the 50 and 200-day moving averages, the blue and black lines there. We had a exhaustion gap reversal as well, so we had a gap through the 50-day moving average gap higher, that is at the end of April, so that's another plus, and also another gap this month. So it does show that there is interest in terms of bottom fishing this stock. Best case scenario at the moment, which obviously looks like it's a long way away, but it is 5 pence plus at the top of this rising trend channel from 2014 there, and stop loss on the buy argument really back below 1.6, 1.7. If you're cautious, maybe wait for an end of day or a weekly close above 2.5 pence before targeting the 5 pence zone. The stock of the moment is coming up. Hvivo, if that's how you pronounce it. I'm a couple of days slow on this because I'd never heard of the shares before, which is obviously perhaps not the best reason for avoiding them. But we've had, again, that classic gap through the 50-day moving average, what I call the rocket launcher formation. That's also came after what is effectively a saucer reversal as well, which is a very positive sign. View at this moment or this time is really while we're above that resistance on the way down at 60 pence, we could head as high as what was a resistance on the way down in 2017, which is roughly 130 to £1.30 to £1.50 pence as a best case scenario. You can see initially we've stalled at the bottom of this gap from June last year, but the bigger picture 1 to 2 month target here as high as 130 to 150 with a fair wind behind it. Stock which I haven't looked at for quite a while but seems to be quite encouraging is Redt Energy, with the RED epic code there. Again, looking like a bear trap gap reversal, which is very healthy. A gap higher today. That was the bear trap gap reversal earlier this month. That broke that March line, support line temporarily, and then we've powered ahead today. Probably just need to see an end of day close above the 50-day moving average if you're cautious to cement the idea that we're heading higher. That's at 6.44 pence. And if we do, then back up towards the 50-day, rather the 200-day moving average area at 8 pence over the next few weeks. But it's just the momentum behind this bear trap below 5.5 pence, which is a big plus in terms of the technical picture here. Stock which has been it's now a bit of a lap of honor situation. Richland Resources rather, pushing ahead nicely after the higher highs and lows of the last couple of weeks. The only real barrier now is the main one, I suppose, in a way, which is the 200-day moving average at 0.44 pence. That was also the initial 2018 resistance. Above that, we could head up to 0.65 pence over the following 2 to 3 weeks. Stop loss at this point really back below 0.3 or 0.35, depending on your risk profile. Stock which is looking quite perky as well. You can see these V-shaped bull flags for May and June. Comes in the form of Vernalis, just approaching, like as Richland is, the 200-day moving average at 8.55 pence. End of day or end of week close above that should see or lead us to 14 pence as soon as the end of next month. Don't expect this stock to go much below 6 pence, and that would be the stop loss at the moment, albeit rather big in percentage terms. finishing off with a situation where you're definitely putting one's head in the lion's jaw. It comes in the form of UKOG, and the reason for the interest here is that I think a few days ago I was pointing out that this could be a bullish falling wedge, although it does, obviously with the recent history of UKOG, it's been a very bearish position, but bullish falling wedge, and we've had a breakout yesterday and today from that wedge. So suggests that we could have a little move to the upside, maybe 2.5 pence to retest the spike earlier this month. If you're cautious on the stock, which I imagine 99% of the population would be, you might wait for an end of day close or a weekly close above the 50-day moving average of recent resistance at 1.5 pence before pressing the buy button. But I suppose the smart play was to assume or to realize that this was a bullish pattern and to buy around 1.2, 1.3 a couple of days ago. That's it from me. More updates at the same time tomorrow.